new IFRS coming in, or there are amendments in IFRS, and that may affect your disclosure requirement, that may affect your accounting process, accounting treatment. So all these things you have to note it down in the planning process, so nothing is missed out when you execute the audit plan. Preliminary identification of areas of high risk of material misstatement. Good question. Do you understand what he says? He says that if suppose the auditor by precautionary measure has taken the lessest amount of materiality level, and if the error found is more than that, but under the normal circumstances that have been within the limit, what will be the repercussions on the auditor? Right? Let me tell you what is an error. Error is when the users of the financial statements changes the decision based on that error, that is called significant. Right? Now, for example, if you make an error of 1 million, as you said, but in the overall context, the user does not matter. He doesn't matter. It doesn't change his decision. Then it will be acceptable. If his decision is changed based on this error, then the auditor is responsible. So this has to be in context with significant error which will change the decision of the users of financial statement. And therefore, materiality level is being taken as a percentage of your profit. The first preference is profit, then you got assets and liabilities and all these things are separate things. But profitability, because that is the lifeline of the entity. Okay, clear? Then preliminary or identification of areas of high risk of material statement. You have carried out the analysis, right, of the financial statement. Now that will show the areas where you are going to have some risk. For example, seasonal products. For example, sugar. Sugar crushing is done in a particular period, right? फिर बाकी सालों में कुछ नहीं होता. But sometimes the management acquires the sugar cane in advance. Either physically they take it if it is available, or they make a contract to buy the sugar at an agreed date in future. Right? So there is a chance of error, there is a chance of fraud in those areas where future contracts are made, and if somebody does not record any of these or few of these contracts in the books account, how would you check it? So you have to understand the process, how it is originated, how it is executed, and how it is recorded in the books. If you understand it properly, then it will give you an idea where is the red flag. So that is the area you have to focus during the course of audit. Right? For example, salesmen are given commission on the basis of sales made by them. Right? And at the end of the year, if they achieve the sales target of so much, they will get further commission of so much. Right? Where is the area of risk? Where is the area of risk? Cut off. Right? So what you have to do is see that in the last few days of the year end, what is the trend of the sales, right? and also check whether subsequent to the year end, are there any return of those sales? If sales are returned, then it was not a genuine sale, and therefore the salesman was not entitled for the commission, extra commission, as well as the commission on that. So these are the areas you have to look for while understanding the process. Clear? Impact of assessed risk of material statement the overall financial level on the direction, supervision and review. अगर आपको ये पता चल गया कि ये sales के लिए है, what would you do? You note it down as a high risk area and tell your staff member, be careful on this area and let me know the documentation of the work you carried out. Clear? Questioning mind. Whenever you are carrying out the audit, you should not take the things on its face value. You should not take the things at face value. You should question yourself whether what you are looking at, what you are doing, what you are accepting is acceptable or not. I will give you an example of a fraud which had happened in Singapore. There was one of the biggest bank of England. It has a branch in Singapore, and one person was made responsible for back office work and the currency in the market. It was buying and selling the currency, treasury activities, right? And he was the general manager of that branch. What happened was, he had one area and with the limit that you are not going to cross that limit. What he did was, he started doing the work on the account of the bank and he started making profit. When he started making profit, people at office appreciated him and probably gave some incentive to that person. That person became greedy and said, if I do more, probably I'll get more incentives. What he did was that he did not bother about the limits, and he exceeded the limit and tried to trade it in various currencies. And as you know, that time does not remain the same all the time. Market crashed, and this poor chap was in trouble. Finally, what happened, that he took the money from the bank and he started window dressing the financials. Auditors of that branch, they went and looked into the books of accounts and he said, okay, I need a confirmation from this party sitting somewhere in other country. I want a confirmation from that party. That gentleman said, okay, I will get you the fax confirmation. And he got the fax confirmation, he handed over to the auditors, and auditor was satisfied, everything was finalized. And finally, that branch collapsed, bankers came on it, and finally this branch has to be liquidated in such a way that full bank, that was Bank of England, it was sold for how much amount? Can you imagine? For £1. The whole bank was sold for £1. Can you imagine what sort of a leverage this person has taken? Right? Now, when the case went to the court, it was found that the fax confirmation which was received, at the top it was written